Good evening everyone, it's Chris over at Williams & Co Trading. Just coming to you this Sunday, 9th of December, just for a little preview on the week ahead. So I'll kick straight into it. I've got my eye on the euro. This this primary count I've got is a bullish one. However, we are chopping around quite a lot. We're going to need a breakout of what could potentially be a triangle here for us to be bullish on this. I haven't got any current positions on this. We have every potential that we could come down here, retest this this trend line at the bottom. We could even break down lower. It's a little bit up in the air at the moment, just with the way the dollar's acting. I want to take a look at the dollar index. Now this is essentially a combination of all the dollar pairs put into one index, and what looks like almost a fifth wave completion up here. Looks like we're in a triangle for wave 4. It's worth noting that RSI is lower and lower as we're getting these higher highs. So we're losing momentum on this bullish move. We have been looking for dollar shorts the past couple of weeks, I'd say maybe a week or two. However, we could have this final push, so that's keeping me aside a little bit on some of these dollar pairs. So if I just shoot back to the euro, then what that means for the euro is that if we are in a triangle in the dollar index, we could be in a triangle also in euro. The triangle breaks to the upside in the dollar, and of course this means the euro is going to come down and post a new low. Could head down towards 11.50, maybe 112. Could provide some support first. So I'm just watching this triangle. If we break out either side, we could be looking at a trade in the euro. Pound looks in a very similar situation. If you have a look at the daily chart here on the left, I've got two ABCs here which could have been a flat, but looks like that's invalid. I would say we could be just in a triangle. I'm going to get rid of that. So same again as the euro. If this breaks down, smells trouble for the pound. If we bounce here, and let's say the euro drops on Monday to come and test this support level, it means that euro pound could see some downside. I'm not sure how much we could get, maybe a pullback towards this support area here before it heads higher. So that's providing that the pound holds the triangle, that the euro heads lower to test the support. Aussie, an important one. We have what looks like a flat correction. However, it's possible, if I just put an alternate count on this, it's possible that 1, 2, and this was a 3, 4, 5. That would be an A. That would be a flat correction for B, and this could have been a C wave. Okay, so we could head below 70 from here. It's a little bit up in the air again. Like I say, if the dollar wants to push higher, then the Aussie's got no chance of catching a rally. So it would be something like this. It looks like we've had 5 really small waves here, so we'll probably get a bounce and head maybe lower, at least to get maybe an ABC here or something. But I'm not looking for longs just because of what the dollar index is doing. So I'm aside on that. Shorts could be an option. Again, as we looked at the euro previously, we might want to take a look at the euro against the Aussie. Okay, so if the Aussie dollar bounces maybe Monday, Tuesday, it could even take all week, to put a little ABC in here. If we get that Aussie strength and the euro is still within that triangle and we see downside in the euro, Aussie could come lower. But what worries me, about wanting to take Aussie long positions is exactly this. It's that we look to have made 5 up. So for me, I'd expect that would at least be wave A or 1. We should now have a 3-wave correction here and then head higher. So Euro Aussie's on my radar. Again, going to keep my eye on the majors, Euro dollar and the Aussie dollar separately, but I'll keep this one as well. The Kiwi dollar looks to have made 5 waves up now. So I'd expect we should come back at least to here, previous wave 4. We've also got some 618s. We'll draw it in. So that would be a 38% falling in line with wave 4. We've also got 50 and a 618 lower. So of course we want our first move to be pretty strong after we get our first impulse. So this is our first 5-wave impulse. We then want a deep correction, preferably for a big wave 2. For now, from where we currently are, there's not really a trade to play. There's nothing to do here really, for now at least. Dollar Canadian, as we say every single Sunday, it's just chop city. It's, you know, it's grinding higher, but it's been a really difficult trade, even for bulls. People sat in this trade, they're having these deep corrections as we're gradually going higher. You know, they're constantly feeling like they're on the wrong side of the trade, even though it is going higher. For me, there's nothing to trade. I suspect that this grind higher is something of a flat correction, and at some point this just has to break down. Because it's not particularly strong, it can't be an impulsive move, and we're not going to just keep going up to new highs. For me, this has actually got to make a reasonable correction, at least to 128 maybe. It's just waiting for those 5 waves down, a 3-wave correction, and it's got to be clean because we've got caught wrong sided on this many times. But from here, there's just still nothing to trade in the dollar CAD. Let's take a quick look at crude oil, just given that the correlation between those. Crude oil look like we're in a little triangle. Probably gonna post one final low before we bounce. So that would mean that dollar CAD is gonna creep higher before we break down. The Swissy looks to have made 5 waves. It's possible that this blue 3 was actually a 5th, and this 4 was a B, which means we could head way lower. But this is my preferred count. As I've mentioned, we could see some dollar strength coming in. This would fit perfectly if we at least get a little bounce in the Swissy. And of course, we have to bear in mind that the Swissy is related to both gold and risk. Excuse me. So if stocks come off, we'll see a risk off play in the markets, which basically means that there's going to be a flight to safety. Swissy is one of those currencies that people will buy when they're concerned that there's risk to markets. So that could see even more downside in this. But if we take a look at gold, we've been tracking. Just make this bigger so we can see it better. We've got this channel. As you can see, we had this really strong move down, and we've had this sideways correction. We've tagged channel resistance. Of course, this could be drawn slightly differently if you really want to take the highs. Could see 1260. But also I've taken a measurement of this wave A, projected it from the end of B. That 100% we've actually we've popped through it, and what I've also done is I've taken wave 4, which is this here, this dotted line. I've took the length of wave 4 and projected a fib extension. So what that's done is it's taken these $8 or so, projected it to the upside, and we've got a 1618 and a 200% extension, which we're now in the area now. So this is a big area for reversal. Again, it might want to just head towards, you know, the 60s a little bit, but you know, we start going too high and we break out of this, you know, and we go way ahead of these fib extensions, then we can't be so bearish anymore, and it's possible that this was some big bottom in formation. But for me, I want to be bearish gold, purely because we've got this big triangle. If I go to the weekly, it's obviously difficult to trade whilst within a triangle, but we had again this big move down from 2011, which is in 5 waves. We've had this sideways consolidation, Again, now we want to see this downside continue. Could take us down into the 700s in gold. Of course, there's always alternate counts. You know, with Elliott waves, possible this was an A, but not an A of a triangle. It was an A of an ABC. So if I just draw that in, that would be A. The triangle would be B. So it means that we'll get rid of that count. And the alternate scenario would be this. Something like that. So it means we're just going to chop around again for another few years. But ideally we can just come down, break 1170, and just crack this triangle support and just head straight to 700. Keep it nice and simple without all these complex corrections. So I have my eye on gold. Ideally this will just turn this week because we're at the area of resistance now. That could be to do with risk, so we could be seeing a flight to safety. We could be risk on, should I say. If gold starts getting hit, it means people are taking riskier bets in the market, because gold is classed as a safe haven. It's considered a safe haven asset. If gold starts getting hit, it's either because one, the dollar's strong, or two, we're seeing risk on. So let's take a look at the stock market, see what that's telling us. Might give us a better idea. Okay, so if I just go to the daily over here, I'm looking at a triangle. A triangle's corrective, okay. So for now, I imagine we're probably going to chop around some more as this triangle maybe develops for a bit longer. It might even get a little bit wider than what I've drawn. Okay, but eventually that's a breakdown. Short term, yeah, we could see a bounce. We're at potential triple bottom territory here, as you can see on the 4-hour chart. We've got this level's been tested 3 times now. Also, if we check the RSI, we've got higher lows in the RSI, so we could see a short-term bounce in stocks. I can't see it as a bottoming formation to then head to new highs. I imagine it's just in the short term. We'll probably come back and retest this 28.15 level that we keep coming to. So if stocks come higher, that means we're potentially a risk-on environment, which means that gold will get hit. The Swissy, this should bounce. I want to take a dollar yen because we're in a position in the dollar yen. I did have a number of different counts on this one, but it's beginning to look more and more like a triangle to me. Okay, so whether it's wave A and the triangle is wave B, and we continue to chop around before then heading lower for wave C is a possibility. But we've pulled stops really tight now, just to protect our position. If we do bounce higher and we stay within this triangle, we're just gonna have to wait for a breakdown. But it's a little bit messy at the moment. If we get that risk-on environment that we're talking about, that means that the dollar yen's going to go higher. If stocks go higher, then it's going to drag the yen pairs higher. So yeah, we're going to keep stops nice and tight on that one. If we get taken out, fine, we'll reevaluate and we'll look elsewhere. That's pretty much it from me. I'll see you guys in the chat room Monday morning. See you in a bit. Cheers. Bye.